Welcome to Richie Shot.
Today is the first day of fall, and we are bracing ourselves for a very fast September. From Fed to silver, we will see what is driving markets today. If you are ready, let's dive in. Christine Lagarde rings the alarm with a smile. Christine Lagarde, the head of European Central Bank, had a lively chat on Radio Classique in France today. With her trademark mix of charm and clarity, she warned the world about the dangers of losing central bank independence. Her biggest concern? Thoughtful. The idea that U.S. President Donald Trump might try to push Federal Reserve Chairman Jerome Powell out of his seat. For Lagarde, that's no small matter. She explained that if the Fed were no longer independent and started taking orders from politicians, the effects would spread far beyond Washington. Since the United States is the world's largest economy, any imbalance there would quickly be felt around the globe. Lagarde also turned her gaze back to Europe, pointing out that political drama is heating up in the Eurozone. With governments facing confidence votes and markets growing wary, she noted that investors clearly see rising risks. Still, Lagarde's message came across with a touch of lightness. Even while talking about serious challenges, she reminded listeners that staying calm, keeping perspective, and not losing one's sense of humor are essential. Silver hits the spotlight, sparkling past $40. The precious metals market is glittering, and silver is stealing the show. Thanks to growing bets that the U.S. Federal Reserve will cut interest rates, investors are rushing towards shiny assets, and silver has become the star performer. For the first time since 2011, silver's price has danced above the $40 mark per ounce. That's a big milestone, and it comes with some extra sparkle. Since the beginning of the year, silver has already jumped an impressive 40%. Not bad for a metal that's often seen as gold's quieter cousin. What's driving this rally? A mix of things. Lower interest rates make non-yielding assets like silver more attractive. But there's also a global flavor to the story. Political tensions, market jitters, and strong industrial demand, from solar panels to electronics, are all helping to push silver higher. And silver isn't alone. Palladium and platinum are also riding the wave, showing that the whole family of precious metals is enjoying a golden, or rather silvery, moment. Analysts say that if the Fed does follow through with rate cuts, this glittering rally may just keep on shining. Bitcoin ends the month on a downbeat note, eyes on the Fed. Bitcoin closed the month in the red after last week's correction, but the real buzz isn't about the latest price dip. Instead, everyone is watching the economic stage, where a string of U.S. data releases could shape the Federal Reserve's next big move on interest rates. The spotlight is firmly on three reports: jobless claims, productivity numbers, and the closely watched August jobs report. Together, they paint the picture Fed Chair Jerome Powell has to interpret. It's not an easy task. Inflation is still hanging around, while signs of a softer labor market keep popping up. The tension between these forces makes this week's data more crucial than ever. Thursday brings the first clue: initial jobless claims. This figure tracks how many Americans filed for unemployment benefits. Economists expect 230,000, almost exactly in line with the previous week's 229,000. If the number comes in higher, it could mean the job market is losing steam, giving the Fed stronger reasons to think about cutting rates. For crypto watchers, the takeaway is simple. The Fed's decisions ripple far beyond traditional markets. While Bitcoin may be catching its breath right now, the upcoming data could either provide a tailwind or add fresh uncertainty. Traders and analysts alike are bracing for a week full of headlines and maybe some surprises. Alibaba's AI push powers a big market comeback. Artificial intelligence is no longer just a buzzword. It's becoming a powerful engine for company earnings, and Alibaba is the latest proof. On Monday, the Chinese tech giant's Hong Kong-listed shares surged more than 19%, marking their strongest level since March. The jump came after a double dose of good news: impressive momentum in its cloud division and fresh details about the company's own AI chip development. The rally extended gains from last Friday, when Alibaba's New York-listed shares closed nearly 13% higher following its latest earnings report. Investors appear increasingly convinced that AI investments are not just hype, but real growth drivers that can shape the bottom line. For the June quarter, Alibaba posted revenue of 247.65 billion yuan, $34.73 billion, up 2% year-on-year, a little shy of analyst expectations. But the real headline was profit. Net income soared 78%, comfortably beating forecasts. And behind that surge was a key story: cloud computing. Revenue in this division climbed 26% compared to last year, a sharp acceleration from previous quarters, as clients sought out Alibaba's expanding AI-driven services. Beyond cloud, the company is also betting big on instant commerce, a highly competitive sector in China where fast delivery meets AI-powered consumer insights. Taken together, these moves show how artificial intelligence is becoming a pillar of strategy, reshaping balance sheets and giving tech companies a new edge. For Alibaba, the message is clear. AI isn't just innovation, it's income. Matcha Mania, Japan's green gold goes global. According to CNBC, Japan's tea exports are bubbling over, with matcha stealing the spotlight. The Ministry of Finance reports that green tea shipments hit 36.4 billion yen, $247 million, last year, 4 times higher than a decade ago. Nearly half of that went to the U.S., mostly in powdered form, where matcha lattes and desserts have become cafe favorites. But success comes with its own steep challenges. Japan's farming communities are aging, and producing tencha, the leaf used for matcha, is demanding work. The plants must be carefully shaded to bring out their grassy flavor, and then the leaves need to be picked, steamed, dried, and finally milled. Producers warn there simply aren't enough hands to keep up with the booming global appetite. That's why Tokyo is considering subsidies to encourage more farmers to grow tencha. After all, when the world can't get enough matcha, Japan wants to make sure every cup stays full.